All right, Maximus Analysis here from May 11th, 2015, and we see currently that ES is not holding at 2100 level. Again, that does not mean that it's a complete sell signal, but again, it's just been churning sideways. So again, when it's sideways, you don't want to put all your powder, or you don't want to just go long. And again, it felt like when on Friday that they were crushing these puts for the weekly options, and it looked like it's going so. So again, NQ given the same thing, a little bit of pop up, but you see the low highs are in place, but it still needs to get above this 4,500 to continue to the upside. You had gold continuing in the downtrend currently from this about this 1211 area, and you also have the YM it needs to hold above this 18,000 area, but again you can see it's very sideways, higher lows but still very sideways. So we want to be very cautious. And you see the Dow again 85 points, so you know they don't want to scare too many people, but the bonds are breaking down. The VIX is actually continuing to the, you know, it's been very, very low. So again, we want to see how this one goes. And again, if you're looking to sell options, you're not going to get a lot of premium when the VIX is so low. Maybe you're looking to buy options, quite honestly. And you got to look at, you know, again, I'm not telling you how to trade, but again, you can also look at the TLT, which is the Russell small caps. People thought it was holding up today. Again, it's flagging, and I don't usually put a lot of moving averages up here, but you can see this 50-day moving average. But I like this retracement, and if it breaks this low, it would definitely be the line in the sand, would be that 1243 area. Royal Flush is laughing right now. Dollar is sideways, not breaking down too much. Let's look at some names. Again, Netflix is continuing to look up, beast into the upside. Again, definitely might take out that high, but you can see there was almost an inverse relationship today with Priceline giving basically it looks like equal price to the downside. Tesla again gave a little pop again from this earnings gap up, but not much follow through that you would really expect. And you want to make sure you're looking at some of these key names. LinkedIn. Again, it's still, you know, quite honestly, you know, if you were looking to go long this thing, you know, might just send me your money, quite honestly, because I don't see what you're seeing. But that doesn't mean that you're wrong. Again, you just want to go on a high probability setup and see what goes from there. Google's at a critical point, and I think that right here, right now, the stock will be above here around this 555 area, and it looks like a sell signal, quite honestly, filling up this little gap real quick. We'll see what it does tomorrow, but this could be a quick play to the downside. So you want to make sure that you're taking care of and managing risk accordingly. You want to look at, you know, Amazon gave this a couple of days up and now is weakening off. So again, that doesn't mean that, especially with all these gaps, you know, this gap up, stay up, you know, gap up. Is it going to stay up? I'm not sure. But again, you definitely want to see a hold of this 415 to 400 level. So we'll see what happens from there. And again, this is a very sideways market, and I tell people to keep their powder dry and only trade your good setups. And what that means is that you have to be patient enough to wait. If you're looking to nibble for action, walk away from the damn computer. Take a walk, say, listen, I don't have any setups today, and be willing to trade tomorrow. Your goal is to only trade your high probability setups. And if you don't have any, that means that you don't trade. If you feel like I have to trade every single day, you're going to lose money. Why? Because you're not going to look for quality, you're looking for quantity. Okay, there's a time and a place for everything. And if the stuff is trading sideways, people always want it. Like trading, you know, a FOMC report. To me, it's not a high probability trade. It's something I want to get a repeatable process in and day out. And I think that's what everybody here is looking to do as well. So again, if you see this ES going on, you see they're breaking down a little bit, but we want to see what happens in the morning. But you can see it again, it's just sideways movement, respect the higher lows, but very sideways movement right now. So you don't want to get caught up. We want to see if they hold about this 50% of this candle's range and maybe continue to the upside. But if they break down, we definitely don't want to see 2060 again, and we don't want to see 2080 again. So currently, we'll see what happens. And again, if this is just a 1 or 2 bar pullback on the daily time frame and popping up to new highs, fine. It just feels like churning. It feels like churning. Again, they've dimmed many highs based on churning, and it feels more like a year 2000 than anything else. But again, it could be wrong. And I have no problem with being wrong. I have adjusted my trading style to day trading due to the sideways movements. So again, I don't want to get chopped up. I'm not looking for 1, 2, 3 day moves. I'm looking for a week to 3 week moves on my swing trades, and longer term stuff, you know, you just lose the longer time frame. So again, Don't feel like I have to trade. Again, cash is a position, and for a lot of people, quite honestly, their ass would have been. If you're looking here, you know, this is pretty much the year end or year beginning. From here all the way, you know, I'm not saying that you go cash all the way through here, but those that were in cash are still probably beating those that are not, if they're not disciplined traders. So be a disciplined trader, look for your perfect setup, and wait from there. Take care.